JD.com have just reported earnings this morning and the stock is up 8%. They just reported a revenue growth of 1.7% year on year, which is really low, but even though the stock is soaring, is up more than 8%. If you are like me, you are probably wondering why the stock is up so much with the revenue growth of only 1.7%. So if you are curious about that, you have to watch this video. So first, let's talk about JD. JD before earnings was probably the most undervalued company on the Chinese market when you compare with other big tech like Alibaba, Tencent or Pinduoduo, for example. I've made a video 2 weeks ago talking about JD. If you are curious or if you want to know more about the position of JD, you have to watch this video. But JD was in a position where they were really undervalued. Chinese or investors in Chinese equities are not willing to pay a higher price for Chinese stocks. But for JD, there are really not much investors who want to invest in this company. And because when you compare to Alibaba or Pinduoduo, for example, or even Tencent, JD is not a high quality business as the other. As I've already talked to you, they have not higher margins like Alibaba, or they are losing market share to Pinduoduo or Alibaba. The economy on China for e-commerce is not the best because there are a lot of price wars, companies trying to gain market share, and JD is not the best company positioned to win market share. That's why this stock is up a lot with only 1.7%, and that's because expectations for these stocks were really low before this earnings report. And I will share with you the latest third quarter results. As I've said, net revenues are only 1.7% up, but expectation was that JD is losing market share. Maybe the revenue will decrease, and this is a small victory for JD's investors. I mentioned in the latest video, JD position. They have almost the market cap of JD is almost the same as their cash in hand. This is absurd, and this is still, even though that's not high quality as Alibaba or Pinduoduo at the moment. Their margins are really low, but they are still a really good company. They have one of the best logistics. They still are one of the companies that have the highest GMVs. They continue to sell a lot, but they have lower margins. This is a different type of business, but they are still a really good company, and I really like that, especially at the price that this company is trading and it was trading before this earnings report. But the revenues were not the best. The best thing I've read in this report was their net income, for example, their margins were expanding, their cash flow increased, I do believe 30 or 40% when compared year on year. So even though their revenue didn't grow a lot, their profits were a lot higher than when you compare to last year. That's because they are doing a lot of cost cutting initiatives. Their capex was controlled. They didn't have a lot of expenses, and that was really good. Chinese economy are trying to maximize their profits, and I really love seeing these companies at that position. So they are having more profits than the year before, and they are expecting to continue to grow. As we have said for the CEO words, we reported steady top-line performance for the quarter with record profitability driven by our proactive efforts on enhancing price competitiveness and platform ecosystem, as well as our supply chain advantage. Logistics is one of the main qualities on JD. They can hold a lot of cost because they have one of the best logistics on China. Even though this is a difficult environment for them, they are having margins compressed, but they still have increased profits, and that was one of the key things I took from this report. Other thing was this is a really good report when you compare to profitability. But the second thing that was really important was what the expectation was for the next quarter. For the fourth quarter, JD is expecting to grow around between 6 to 10% revenue growth year on year, which is really good. It is acceleration in their business. Maybe it has something to do with Double 11, but this is the key highlights of JD. I do really like this company. It's not my favorite company. I do prefer Alibaba or Pinduoduo business, even Tencent, which reported today as well, and it was a really good report. They have revenues growing above 10%, and the stock is up 5%. But you can compare both companies. Tencent is growing faster than JD, even though they are only up 5% when JD is up 8%, for example. That's all about expectations. And JD expectations were really low, and this is a good report for JD, as I was expecting as well. So I do really like this company. They were really undervalued, still under my intrinsic value. I'm not planning to buy more shares, but I'm happy with this report. I do believe it was a good quarter. They delivered a third quarter, a solid third quarter, in my opinion. Their core e-commerce business continue to grow, even though it's a slow growth. They are still growing. JD is a more mature company. They will not have high growth ahead, but they will continue to grow a little bit of their core business. They will. I hope they can have margins expansions, and with that, their earnings percent can increase. I'm really happy with their free cash flow that is growing. They have a lot of cash in hand as well, almost the same as their market cap. And I do believe since they have one of the best logistics, that it will be really important in their future, and they are well positioned to continue their growth in their fourth quarter. So I hope you find this video useful, guys. This is my report on the latest earnings report of JD, and tomorrow we will have Alibaba earnings. Everyone is expecting that, and if you want to see the next earnings report for Alibaba, please like and subscribe this video, guys. Bye.